Hi, everyone, and welcome to another episode of Living on Blockchain. Today, we are speaking to one of the most dreaded but absolutely critical aspects of Web3. That is what we are covering today, crypto taxes. But don't worry, this is not your average dry tax talk. I am joined by the incredible Janna Scott, founder of DeFi Tax, a game-changing platform designed to bring real-time, audit-ready compliance flow. Janna isn't just building software, she's bridging the gap between regulators, enforcers, and everyday crypto users. With deep insights on how the IRS actually flags audits, the pitfalls of crypto tax tools, and how users can proactively file, with strategy and confidence. This conversation is packed with a lot of practical advice and has a very future-facing perspective as well. So whether you're somebody who's a degen, a long-term holder, or a founder navigating crypto compliance, this episode is for you. So let's deep dive right in.
It became, the stuff from accounting to tax is really not that difficult. I worked for multiple companies, and then I switched after I got my degrees. I switched over into the government sector, and eventually I said, this is really not where I want to be, and I went back into public accounting. And 21, 22, clients just approached me and asked, how do I report my crypto taxes? And I've had crypto since 2017 and have, traded here and there. And it really didn't become part of my world, the taxation aspect of it, until about 21, 22. And I went down the rabbit hole to really find the perfect product, the product that is all comprehensive and gives my clients, taxpayers, the most accurate outcome when it comes to capital gains, losses, income, so they can report it accurately to the IRS and various other tax agencies across the world. It's not just US, it's in Europe, it's in India, it's in Australia. And so I went on the rabbit hole and audited all of the products because I wanted to find what the perfect solution would be.
Okay, so that is how you got your first bite into crypto and Web3. But what kind of prompted you to actually build DeFi Tax? What were some of the red flags that you noticed in the tools that already existed? Apart from, like you mentioned, there were discrepancies that you came across. Was there anything else that kind of prompted you to take this bold step?
Yeah. So what I did is I had multiple different wallets and exchanges, as we all do when we have crypto. But I had this small little wallet, and that was in 22, maybe had 300 transactions from 17 to 22, maybe 50, 60 a year. And I took that and I connected it to all the products on the market, and not just the US products, but products made in India, products made in the UK, in Germany, and in Australia. So all across the world. And my expectations were that the outcome would be similar. Maybe somebody reports $100 in gain and the other product maybe $105 in gain, or $90 in losses. However, that was not the case. The numbers varied by 25 to 35%, sometimes even more, when it came to capital gains between each product. And it wasn't like 5 products matched, 7 products didn't. There was some kind of common ground. It was really none of them had any common factors, and 1 + 1 is 2, right? Math should not be varying that much, especially on the same set of data, especially on a yearly transaction, of 50 transactions. I mean, that's not difficult. And we all know when we are in crypto or Web3, we can have 1,000 transactions in a matter of, a couple months. If you use bots, if you do DeFi, you can have tens of thousands of transactions. And so I was a little baffled. I was not really sure how to proceed. So what I did is I went and I grabbed all the raw data from the tax products, and then I grabbed the blockchain, because the CSV files that these exchanges give you are not comprehensive enough. They're missing important data. And I went down the rabbit hole to try and figure out how to manually do this, and figured out every single issue within each of the products. Because if the IRS, at least here in the US, the IRS doesn't accidentally report something inaccurate. They will still add fines, penalties, underpayment penalties, late payment penalties. They could add tax evasion penalties. They can, interest on anything that you falsely report, whether it was an accident or not. And it is detrimental to the taxpayers, because if these audit letters go out, the result is everyone is going to fail an audit. And, my clients at this point, they get a letter from the IRS that could say they're getting a refund, and they will still panic and tell me, I got a letter from the IRS.
Right.
It says nothing.
Yeah.
Now,
Just the
imagine
name itself itself can, strike terror, right?
Yeah, exactly. And so now imagine in 21, the IRS sent out 1,000 John Doe letters, and that went to all the exchanges, any product that uses KYC. And so it could be MoonPay, for example. You have to verify who you are before you can buy or cash out. Coinbase, Kraken, they all are KYC products. And they sent out 1,000 John Doe letters telling them that you need to release and tell us or residents, anybody with the US Social Security numbers, who they are, and if they, how long have they used the product, they're not getting details as to how much they've used the product, but they're getting details that these people had crypto. So at this point, the IRS knows, right? Whether you bought it on Coinbase and then transferred it to a cold wallet, they know you have crypto, okay? So the audits were already in place, but the full-fledged audits didn't start yet. But can you imagine millions upon millions of audit letters going out to taxpayers, and neither their account nor any of the products can get them to pass an audit, right? And that was the concerning part. So when I did all the research, I wasn't even at the point of I'm wanting to build something. I just wanted to find a solution. And I contacted all the products, and I said, hey, I found discrepancies, I found issues. I don't want any money. I just want you to fix your product. And I said in a very nice way. And 90% of them said, I don't care, not our problem. One of the compliance officers actually blocked me. I'm like, okay, fine. Yeah. So the 10% I talked to didn't actually really care. They just ended up turning around trying to sell me their product. So I said nothing. In the beginning of March, the SEC, I met with the SEC division chiefs and discussed the issue. They sent me straight to the IRS and congressional committees in order to show my research as well. And in those discussions, we did discover that the IRS, who was doing audits at the time, was actually doing the audits inaccurately by getting inaccurate and incomplete data. So that's a big issue. And the IRS did stop the audit based off of the research. However, while we were discussing it with them, and while I was asking them, please, fix this, inform the taxpayers, whatever it is, none of those steps were taken. And they've partnered now with Chainalysis, which is a company helping them trace and track assets and help the government work. Chainalysis works with Homeland Security, FBI as well, to seize assets. So in 2024, the universities I was working with to validate my research and do a peer review and unbiased third-party review and validate my research, actually use my research again to put a halt on the IRS audit. In 23, when it became clear that nobody is really doing anything to fix the problem, yet they consistently require the taxpayers to report the crypto. And it's not just the US, it's other countries as well. I think India is starting to work on crypto taxation as well. Europe is, Australia, UK, they're setting them up for failure. They're setting the taxpayers up for failure, and it's not fair. And so when that became clear, I said, you know what? If nobody wants to fix it or do it right, I'm just going to do it myself. Easy. I regretted that decision many times. But I don't like giving up or throwing in the towel. So here we are, about ready to launch after a lot of double checking, triple checking validations from tax attorneys, from PhDs, from the universities, that what we're doing is accurate.
Awesome. I'm glad that you did not throw in the towel, because I think this is something that is a very important issue that plagues the industry. Users are not going to be very comfortable utilizing these products, being a part of this parallel economy, if they feel that the taxmen, are going to come after them when they do perhaps play around.
And they will. Yeah. And they will. The publication that the IRS came out with in end of 2024 very clearly states that they're looking to replace a third of their budget with the crypto audit. So, and they're billions of dollars worth of budget. So, that's at the detriment of the taxpayers. And I know people think the blockchain, is anonymous, but it really isn't, especially, if you think about it, 4, 5, 6 years ago, we had in the US access to a lot more exchanges, a lot more products. And now we've been whittled down to a handful that we can use to purchase crypto. While crypto itself isn't regulated, products are. And these products that are regulated, they have been required by the IRS and the Department of Justice to give out information on that. They might not give the details of our transaction history, but they do give the details of who had it. And so it's not as anonymous as we think it is, because anytime you purchase or sell, there is a KYC KYC involved. You can hold it on your cold wallet or on MetaMask or anything that doesn't have KYC, but as soon as you cash out or purchase more crypto, there's going to be a validation process. And, it's not as anonymous. So yes, while crypto technically is not regulated, the products are. And when you do get audited, you do have to disclose all of your crypto sources. And, and if you don't, Chainalysis is good at tracing and tracking, and they're working with the IRS. There's contracts outstanding. So, they want a piece of the pie. The pie is pretty big.
Yeah. Everybody wants a piece of the pie. That's absolutely true. As I said, I think this is a very pertinent issue that, you guys are tackling. So, two things. You mentioned that, you're very close to the launch. So can you tell us a little about when you are looking to launch the platform itself? And can you also tell us if there are any limitations geographically vis-a-vis who can perhaps use the platform to avail yourself?
So I've been pushed to launch a while ago, but I'm double and triple checking because I can't make these statements and then launch a product that is faulty as well. So we're right now, if you go to our DeFiTax.us website and join the wait, the first launch is going to be only the wait list, the people that have signed up for the wait list, and they're going to get some additional benefits, etc. And then we will launch it to the public, probably within the next 2 to 3 weeks. So right now, everything is in US dollars and English. Of course, the next step is so you can still use it. There's a conversion you have to do, but we are going to implement a conversion. And again, 1+1 is the same thing across the world, so it will not have demographic limitations. We have not implemented the language, changing languages, changing it from English to German, for example, or having Euro implemented, but that's going to happen probably over the summer so that it is more feasible to use all across the world. But again, like I said, 1+1 is the same. Capital gain across the world is the same. The taxation differs, like the UK, they don't have long-term, short-term, but that is something that has nothing to do with our product. That's something that the tax agency, and then income again is the same. The rules are pretty much the same across the world. There's some differences, but we're taking those into consideration.
Okay, that makes sense. So all the best for the upcoming launch, and I'm sure that this will do wonderfully well. I'll be sure to sign up on the waitlist, and I'll also put the link in our description once this episode is out, so that other listeners can also join in. So can you perhaps talk a little about the user flow? Once a user does get access to your platform, what can they expect?
Yes. So let me start by going over the products that are already on the market. So one of the issues that I found is that these products will not stand up in an audit. And the reason being is, so if you're a business owner and you use, for example, QuickBooks or any kind of accounting software, if you get audited, you will not be able to use that software in an audit. So you can't say, hey, I'm going to send you my QuickBooks reports or my general ledger. The IRS won't allow it because you can manipulate data in those products. Okay. The IRS will always ask for the actual bank statement, the credit card statements, bank statements, because those cannot be manipulated, right? You can't just call your bank and say, hey, I wrote this $10,000 check. Let's remove a couple zeros. I don't like that. It doesn't work that. But on these products, you can do this on the bookkeeping products, and you can do this on these tax products on the market. So the features are very detrimental to the user. The features have to be implemented because they have issues pulling the correct data, so users can actually manipulate the data, but they can manipulate it to a degree that it could be seen as fraud or tax evasion. And it could be an accident. It could be on purpose. So our product is complex on the back end, but very simple on the front end, meaning you log in, you choose which plan you want. We have different plan options based on the amount of transactions you have, the complexity you have, because if you want to go really deep down into the calculation methods of token level, you can. And then you connect all your sources. We'll do the calculations and we'll give you certain items to review. And then you can make some adjustments. For example, you can change a transaction type, but only certain types. You can change a receipt to that it was a gift to you, that it was an income. You can change a send to you send somebody a gift. So there's certain things you can adjust, but you can never adjust like in the other product, you cannot adjust the basis, the type of currency that was transacted, the date and timestamp on the transaction, the spot price, any of those things. And because that's just what happens on the blockchain stays on the blockchain. You can't just make those fundamental changes. Once your transactions have been reviewed, you can go into the report page where you really see a detailed layout. You don't just see one calculation method like HIFO, FIFO, or LIFO. You can see all 4 different methods. You can compare, you can figure out what is the most feasible option for you based on each wallet, based on each currency. And then we have different types of what if analysis. So users are able to say, because the question I get a lot in tax is clients ask me, hey, I want to sell some crypto. What is my tax liability going? That is not an easy answer. And so we are implementing a tool where you can say, so you have all of your exchanges, wallets connected, and you can say, I want to sell 1 Bitcoin because I need some cash flow. And we say, okay, if you sell half of one out of Kraken, half of one from your MetaMask, half of one out of Kraken, a quarter out of MetaMask, quarter out of Coin, that will be the most beneficial way for you to get your liquidity and keeping your tax liability as minimal as possible. Or we will tell you, hey, listen, you have some coins there that have been sitting there around, you haven't done anything with it, you have a capital gain right now, go sell some of A, B, C, D, and go generate some losses to lower your capital gain. So we'll also but the other part is we actually, due to the licenses that we hold, meaning we can represent you in front of the IRS. So all the other products are really built by coders. They're not built by tax professionals. And so due to the licenses that we hold, we can defend you in front of the IRS. And we can really defend in an audit and validate the capital gains and losses that we have come up with. Whereas if you get audited, you have you use one of the products on the market, they will just point you to some kind of CPA, accountant, tax preparer, etc., and they will charge you to defend them in an audit. But if they use any of the products out there, the IRS will clearly say, nope, those products aren't valid. We know the data is inaccurate. You can't prove that the data is accurate compared to our data. We will go with what we have. Okay. And none of these accountants are able to do a deep dive and manually calculate 20, 30,000 transactions over a long period of time. Well, we can. And so we have an audit protection included that if you get audited, we can defend you and we can ensure, and it's going to cost you a lot less than hiring somebody who will have you fail at the end. Because we did not just audit the software product. We audited 53 of the so-called crypto tax experts in the US, whether it's law firms, accounting firms, or individuals that just call themselves crypto tax experts. We audited them all. We gave them our little 300 transactions, paid them $3,000-$4,000 for this, just to get back something that is completely inaccurate and definitely doesn't stand up. So we've made it, what we're trying to build is a product that is very straightforward. It does not give you a lot of options and features because you're not supposed to, right? Saying it again, 1 + 1 is 2. You cannot change what happened on the blockchain. But a product also that gives you a good picture of what is the most beneficial way for you to go forward and how to report it on your taxes, but how to report it on your taxes the accurate way. And then we also are willing and able to defend the reports we've given.
Right. I think this must be one of your bigger USPs, that the fact that, you are going to take it up in case they are audited and that you're going to support them basically end to end. So I think this would be a big USP for the users who are signing up to avail your services and use the product once it is launched. Can you tell us a little about how it would function, like the platform itself, when there is a user who's active across multiple chains and multiple DeFi protocols, which is usually the case? How does the platform work that way? Does the user have to enter the data? Like, how does that work?
Yeah, so you don't manually enter any data. We have everything. Everything is OAuth to an API. Because what we've learned in our research is that going into any of these products and pulling a CSV file, for example, from Coinbase, it does not give you a full set of data. There's data missing, there's information missing. So we're staying very far away from CSV files. There's a couple of products where we do say, go upload a CSV file, but only because we know that they give you the accurate data. Otherwise, do not get an option for uploading a CSV files like some of the other products. Everything is API OAuth 2. So, you can log in using Coinbase, you log in using Kraken, Gemini, MetaMask, you you put in your addresses, and we pull the data directly from the blockchain. So anything on the private blockchain, we have API and OAuth 2. We have API for the blockchains as well, but OAuth 2. And from the public blockchain, you just enter in your address. You don't have to sign in with anything. And then we pull the data, and then we do backend calculations, and we'll let you know, depending on how much data you have. If you have 20,000 transactions that we go through, it will take a minute, right? But then you get an email, we'll let you know, hey, it's done, and it's all automated. And then the transaction, you have a transaction page where you can see all the transactions, what the issues are, and then we have a page for you to review certain transactions, because some we will catch as like a self-transfer. For example, you transferred something from your Coinbase wallet or account that you just connected to your MetaMask wallet that you connected, and we say, hey, just verifying, is this a self-transfer? So there's a little bit of manual labor for you, and but a lot of it is just automated. And then we also have a bookkeeping product for business owners. So you can generate, a profit and loss and a balance sheet. You can account for expenses and income, and really give something to your accountant that is comprehensive.
Okay, all right. So that gives me a little bit of a good idea about how this would kind of work. How are you ensuring the safety aspect of the user data? Because I think that is something that they would be pretty concerned about as well. That you would have access, considering you are logging in to their accounts. How are you ensuring the safety and security?
Yeah, of course. So we do not keep any. Okay, two things. The OAuth 2 we have in place. All of those are read-only. None of those are transact. We do not store passwords. We do not store username. Nothing is kept. Okay, so we don't even have a database with it. When you're logging in, let's say through Coinbase, we have the connection with Coinbase, but you log in on Coinbase, and then you allow us only access to the read-only data from the blockchain, and we're not keeping the access. Coinbase doesn't share or Kraken or any of them. They don't share the passwords with us. We don't have any of it. All we have at the end of the day in your product, when you log into our product, in your account, all we have is the raw data. No usernames, no passwords. We don't keep any of that. We don't have access to it. It's all through the third party that you're using. They are just pushing us the raw data.
Okay, I'm sure that this will put the user's mind at ease. So what are the most common misconceptions that people have about crypto taxes today? Or maybe, let me put it this way, what is something that users avoid thinking about vis-a-vis taxes until it's too late? And how are you trying to change that mindset?
The biggest misconception that I've come across over the last couple of years is, like I said earlier, it's on my hardware wallet, it's on my ledger, it's on my treasure, it's on a cold wallet. The IRS won't know about it. Right. Like I said before, they do know about it. They might not know where you have it right now, but anytime, and listen, you don't even have any tax implication. If let's say you bought like 10 Bitcoin back in 2014 and you have it on a cold wallet. If you haven't done anything with it, if you haven't sold it or traded it, you don't have taxable events. It doesn't matter. But if you did that and then you put it on a cold wallet and you trade it within there's taxable event. Things happen. And again, anything you've done that resulted in a sale and a buy, anything like that, it is a taxable event. And a lot of those did require somewhat of a KYC. And the IRS knows. So the second part is, when you do your tax, that little tiny box that popped up in 21 that says, did you buy or sell digital assets or cryptocurrency this year? They put it on there for a reason, because if you say no and they know you traded it, they got you on tax evasion. If you said yes and you didn't report it, you're still you're in the gray area of tax evasion, but you said yes, but you didn't report any. If you said yes, but you didn't have taxable events, they don't care as much. But if you said yes, you didn't report anything, and you did have taxable events, they do care. It's just, I think we're past the point of saying it is anonymous. The IRS, the government are not going to know about it, right? I think we're really, really past that point, and people have to understand that it's not. It is not as anonymous as we think.
Right. Yeah, I think that's important. I think people need to sort of accept that, because even the policymakers and the taxmen, they're getting more savvy, with time. So they're not as clueless as we perhaps like to think, or at least, perhaps the small time creators would think. So that actually takes me to my next question. How can small teams or individual creators basically ensure that they are compliant without perhaps hiring an entire accounting team, which is something which might be out of their reach at that.
It is. It's very difficult to be compliant. It is so difficult to be compliant because, like I said, there's crypto tax experts on the market, and listen, we gave them $2,000-$3,000. We gave them 300 transactions, and what they did is they went and took it and ran it through one of those products for $100, and then gave it back to us as their own work. Okay, so the same thing that happened during COVID when the ERC, the employee retention credits, came out. There's going to be companies coming out of the woodwork saying, I can help you. I can help you get through the audit. They can't. Okay. They really, really, really can't, because the products on the market are not sufficient enough. Okay. The IRS already knows that what we're doing, we've ran it by them. We have gotten it validated by multiple professionals in the industries that actually work with universities, with the IRS. Okay. We have somewhat of a leg to stand on. Yes, we will still have to validate it. We'll still have to prove it to them in every single audit, but we have somewhat of a leg to stand on. The other products on the market don't have a leg to stand on. And that's the scary part. And that's why I offered them the research for free, right? In order to protect their users. There are millions of users, these multi-billion-dollar companies, and they didn't care enough, right? Money rules the world, greed, right? They didn't care about fixing it, because then they would have had to admit to their users that there was an issue. Fine, I get it. Well, I don't actually, but that's a different story. Now, if you want to stay compliant right now, it is difficult, and it's difficult. How do you go back and stay compliant? Now, if you are an influencer, a content creator, etc., and this is your income source. So crypto is your income source, right? We have also built, that's why we've built a crypto bookkeeping system base for you to actually categorize your expenses, categorize your gains, your income, and see what it actually is, right? Because I pay people with crypto, right? It should be an expense to me. I get paid with crypto from some people. It just is what it is. But we have to be able to trace it and track it. So what I advise everybody to do is make a list of all your wallets, all your exchanges, all your addresses, right? Keep those addresses, because when you do get audited, you want to have a comprehensive picture of everything, right? You don't want to get caught, them finding something that might belong to you and saying, hey, you tried to hide this, right? So it's hard. I know I wish I had an easier answer. I wish I had a better answer.
Yeah, I think it is very complicated, and that is why there are trained professionals like you who can perhaps help out in this process, because it is tedious. Somehow anything related to the government or any kind of filing bureaucracy is tedious. There is a reason why there are professionals who kind of
once our product launches, right?
Yeah.
Then I can say to you, go to my product, go, sit and we'll help you get, validated if an audit happened, because we can, we've already discussed a lot of things with the government agencies, and again, we have their publication is coming out here within the next month or so by the universities validating my research. So, I think it's important, right now, no, in the next 3 weeks, yes, there's a solution. So
right. Absolutely. Okay. So I think users and your users and my listeners will be very excited to use the platform to become fully compliant. I think nobody wants the hassle, of getting audited or having to deal with any kind of letters from the taxman, and they would rather be compliant, and avoid the hassle. So I think there'll be a lot of users will be eagerly waiting for your platform to get released. Now, taking a more macro look at things, do you think regulation is catching up with innovation, or are we still miles apart?
This is the thing, right? Like I said earlier, technically nobody is regulating crypto. However, the IRS, the government is regulating the product, right? The exchanges and wallets that let you trade crypto. Okay, but they're not actually regulating crypto. They're just regulating the financial product, which is frustrating. But then they are, even though they're not regulating crypto, they're also saying you got to give us all the data, and we're going to trace crypto, and we're going to partner with companies that trace this. And so it is regulated. While it's officially not regulated, it is regulated. And so when we think about it this way, the SEC, the Commodities Commission, they're all arguing over who should get oversight over crypto. If they would stop arguing, they might figure something out. If they would actually work together, the different government agencies, they might have a solution at this point. But honestly, no, I have no idea what to think. I thought a couple of years ago that the SEC would get oversight. Now I can't tell you who's going to get oversight. Somebody will eventually, but couldn't tell you when or who.
Yeah, I think that is true. What you said, I think that is something that not just in USA, I think all over, even in India, they are trying to actively tax crypto, and it's very prohibitive here, for traders, that the kind of tax that they have implemented. But they are not actively trying to create a policy around crypto. It always gets delayed.
But they all want a piece of the pie, right? They want you to pay up.
They want you to pay up without really fully regulating the space or creating policy around it, or even perhaps supporting innovation, which is very frustrating for the builders, because you see a lot of people moving to the other hubs. Obviously, a few years ago it was Singapore, but Singapore also has stringent licensing regulations. So now everybody keeps moving to Dubai, and they keep moving to the free zone so that at least they can innovate and create more products in this space.
So, I mean, look at the Bahamas and Jamaica. They already made their own, so I know what you're saying. I mean, quite frankly, listen, I work with people all across the world, and you know how much easier it is to pay somebody with crypto, to help people with crypto without having this constantly, why does my bank have to butt in when I want to pay somebody, whether it's in India, whether it's in the Philippines, whether it's in Germany, whether it's, what is it, why do they make it so difficult and have such high fees, right? With crypto, we are breaking down barriers that allow people in countries and in communities that have no other way to maybe make money or get paid, right? The crypto reaches everywhere. It doesn't have the fees. It doesn't have the, the barriers that I'm posed by the bank, right? That tell me what I can and can't do with my money. Or I have to jump through hoops to pay somebody, So, but that's exactly what it is. It gives more freedom, and well, they don't want us to be free.
Yeah, I guess, it's a little about control, I think. But if you had to say, give a message to the regulators, what would that be?
Something that they'll never do. Be transparent. Care not just about who gets the power, but care about the people that you're supposed to be protecting with these regulations. Care about the taxpayers. You know what I mean? Like you don't care. You're fighting. You're suing. Here in the US, you're suing Coinbase. You're fighting over who gets ABC. Yet when I come to you and I say, hey, these products on the market, these multi-billion-dollar products that are operating out of the country that you're supposed to be regulating, you're not doing anything about them when they're reporting everything wrong. You're not warning the public. You're not dealing with the product. But when it comes to regulating and doing something that benefits you, you do it. Care about the people that put you in that position in the first place, right? The people that you're supposed to be, that are supposed to benefit from the regulation. And it's not you. It's not the people in charge. People that, the normal people living in this country paying their taxes to pay for you.
Yeah, I think protecting the people that they're supposed, just paying attention to, perhaps, leave alone protecting, but just paying attention to people they're supposed to be protecting, I think that would take us really far. So I completely agree there.
No, it really would, and because the SEC, they've known about these talk to the FinUp division, which is they should be able to go out there. If they can sue Coinbase, a company that they're not even in charge, they're not even the regulators of crypto, but they're suing Coinbase for years now, right? Why can't they go to those products that are actually detrimental to the taxpayer and say, hey, you're doing it wrong? Why didn't the IRS? Why didn't the congressional committee? They have all the research. They know that it's wrong, but yet they're letting the taxpayers fall, and requiring them to report, knowing full well that nobody's going to report it accurately, knowing full well that everybody's going to file an audit. And now they're pushing the liability onto the exchanges by requiring them to produce 1099s, knowing full well that those 1099s are going to be inaccurate. So, it's just a whole lot of not caring about the people that they're supposed to be caring about.
Yeah. It's just about who gets the bigger chunk of the pie, like you've said so many times in this conversation. So I do want to ask you a little about AI and how it can perhaps help with this entire process of taxation and calculating the taxes. Is that something that you or your team are planning to utilize in your product? Do you think that AI has the power to perhaps disrupt the space to any logical capacity? If that is something that you're looking at, is that something that you're seeing it as a threat or something that can support you in your endeavors? What's your take?
I think AI, so there's a yes and no. I think AI has the capability. Right now it doesn't, okay? I've run a lot of different scenarios with a couple of tax attorneys I work with through AI, and AI did not give us the right answers regarding taxation. Okay. And then you say change your answer, and it just changes the answer. It shouldn't, right? 1+1. There's certain rules. Okay. So, but I'm also working with an AI company to go through all the if this then that scenarios, right? Because taxes in general are very personal. Okay. It is not just black and white. It depends on each individual situation, how they're getting their money, what kind of business they're having if they have one, right? Yes, it's easy if you're just a W-2, easy, right? But now everybody has something going on their side. So there's multiple different questions that AI will have to ask in order to get the right answer, right? And that's, crypto, it's fairly straightforward. The algorithms and the back end, I think, still need a human touch just because there's a lot of if this, then that as well. However, when it comes to, predicting and assisting with, doing some cleanup, giving guidance, I think AI is a really good product to assist and make our life easier. But I think there's a lot of the teachable aspect. It needs to learn a little bit more based on certain situations that are not just black and white and like in everybody's life, right? For it to be very beneficial in the tax world. But yes, we are looking at integrating AI.
Okay, that's wonderful. You guys are forward facing, and I think, like you said, I'm on the same page as you are. I think AI is not there yet. Right now, it does require a certain human touch, but hopefully, it will get there. And then we'll have that to deal with. And right now, as it stands currently, it is good for a lot of things, but maybe not for something as niche and which requires professional help like taxation and audit. So that's a great answer. Jaya, now we are, I think, really coming to an end of the slot that we have. I did have some one-word answer questions. So like a lightning round we'll do with a few questions before I ask you the ultimate question that we usually ask everybody on the show, and we'll wrap up. Okay?
Awesome. Yeah, go ahead.
Okay, so the first question is crypto taxes in one word.
Complicated.
Yeah, I think that is what I had as well. DeFi, liberating or overwhelming?
Both.
Okay. You think I think that it is.
I think it is liberating, but it is also overwhelming. I think it is both, but I think it is. I think it is liberating. Like I said earlier, it reaches the corners of the world that have a hard time, benefiting from anything else that the world is producing.
That is true. I think when there is a cost to the freedom, I think that is the case with everything in life. There is a cost to pay, and I think with DeFi or with any kind of a decentralized service, the onus is more on the end user. The convenience perhaps might be slightly altered. You do have the prerogative, but there is a price to pay there. So it is liberating, but it can be overwhelming if you don't necessarily understand it or you don't have the capacity to deal with it on a day-to-day basis.
Yep, agreed. Yep.
Regulators, friends or foes?
Yeah, foes.
Okay. I think that's for regulators all over the world. Most stressful month of the year?
April.
Yeah. Stable coins, boring or brilliant?
Say that again?
Stable coins, boring or brilliant?
I think they're brilliant.
Yeah, I think they have so many use cases. And I agree. They can, like, if you are looking at it from the perspective of just innovation, you might think that, okay, it's a boring piece of technology, but the use cases are so many that makes it brilliant.
Well, and that's what it is. We have the high risk crypto, and that's great. That's great. But then we have people who use crypto for their regular life, right? Like for their regular pay. Do you want to hold your paycheck in something volatile, or would you rather be able to put it in a stable coin, right?
Yeah.
Your play money, great. Keep it in volatile, high risk, high reward crypto. But if you want to have some security within the crypto world, I think the stable coins are great. And if we want to replace regular currency with crypto, the US dollar, the euro, whatever it is, there needs to be a stable coin, right? They can't just be
Yep.
high volatility.
Yeah, that doesn't make sense for day-to-day usage. So that I understand totally, and I concur with you. Worst tax mistake, ignorance or avoidance?
Ignorant.
Web3 in 2025, mainstream or very niche?
Say that again.
Web3 in 2025, mainstream or niche?
See, I'm in the world that sees it, so I would say mainstream, but I also see the other side of the world that has no idea what we're talking about.
Yeah.
So I think it's divided. I think for some people, like my parents, they would be like, "What are you talking about?" Right?
Exactly. Yeah.
But then I talk to people talk to some of the people I work with, and for them, it's mainstream. So I think it's a little bit of both. I think it's getting bigger, but I think there are some generations that will never touch it.
Yeah, I agree. Audits, terrifying or manageable?
Manageable.
Your superpower as founder?
I'm tenacious. I don't give up.
Yeah. We mentioned that you didn't throw in the towel, and that is why we are here. So yeah, those are the questions that I had. Gina, this has been such a great conversation. I think tax-related conversations can be really boring, but this conversation was anything but boring. I'm really grateful that you could make the time. And there is this one question that I ask everybody who comes on the show. You are also somebody who's seen both sides of the world, like you mentioned that there are some people who perhaps never touch Web3, but there are other folks that you're working with on day to day for whom it's completely mainstream. But if you had to perhaps give advice to folks who are still thinking whether they need to get into Web3 in any way, in any capacity, or play with the tools or the tokens a little bit, what would be your advice to such people so that they can truly start living on blockchain?
I think, and this is something where AI can be useful. It's overwhelming. Go online and Google Web3, right? There's a lot that comes up. Crypto, lots that comes up. I think there is good podcasts, but there's also good books, or there is good AI where you can really ask simple questions and get simple answers for you to understand the basics. And I think you have to understand the basics, smart contract, how the blockchain operates, in order to really understand it. And I think people have to start at the beginning, like with everything, because if you jump in the middle, I think you're missing pieces that might be detrimental for you. So slow but steady wins the race in this case. People who have been in this space since 2010 and 11, 12, right? They've grown with it. But this is such an ever-evolving and fast-growing and changing environment that I think somebody that comes in now has to really go back to the beginning and understand why crypto, why the blockchain, why Web3 came to be and what it is before they move into the big, in with the big boys, right? And going and trading high amounts and cashing out maybe people had cash out retirement funds, right? You need to understand it before you actually go and dive into it.
Yeah, I think that is very pertinent advice, and this is an oft-repeated advice on this particular show as well. That just understand what you're getting into. Do not put all your eggs in one basket.
Yeah.
Exactly. Just sort of make nuanced. These decisions should be coming out from knowledge, not from a sense of FOMO. These should be choices that you're making after due deliberation. If it is related to money, and if it is even related to trying out these tools, I think you owe it to yourself to know this technology, because it's going to take over larger parts of our lives as we move forward. But you need to be careful, because like with any other industry, there are bad players and good players, and you really don't want to get a bad taste initially, which will kind of put you off.
100% agreed. Yeah.
So wonderful. This is a great way to wrap up this episode, Jana. Thank you so much for making the time to speak to me today. Any last words or last thoughts that you want to share before we wrap this up?
Well, thank you so much for having me. I think we're on the same page in a lot of the areas, and I just hope that we can all together, especially like we talked about the regulators, can ensure that we're doing what's right, and hopefully not give them a chance, but to follow what's right. It's difficult. It's a long road, but it does help us with our freedom in a lot of different ways. It takes away the power from the banks and the regulatory agencies, and I think that's what scares them. And so with the innovators out there who come up with new ideas within the Web3 AI, I think we have a good shot at improving and really bringing the world together, right? I mean, the internet has already done this, but first we were just watching, right? The internet let us watch. Now we actually get to interact with people a lot more and help them and work with people all across the country, all across the world. And I think that's important. I think that needs to keep going. We need to not be divided into different countries, but work together for the same financial freedom that we all want to obtain.
Absolutely. I think financial freedom is what most of us are after. And just having that with this particular tech, I think is supplemented, and it just goes hand in hand. So that's the way to go. And those are great thoughts.